Welcome. We will follow this book. This is Accounting Principle Book 12 edition. Weygandt, Kimmel and Kieso. And this is the first chapter of this book, Accounting in Action. And this is the learning objectives on identifying the activities and users associated with accounting. And identify the activities. We have three activities. And users associated with accounting. We have the accounting data users. First, identify the activities. Identify the activities. Here, accounting consists of three basic activities. It identifies, records, and communicates the economic events of an organization to interested users. That means what we identify. We would like to say the economic events we identify. If we make sure that this is economic events, that means we call it identifies. And number second, records. We will record after confirmations of identification. We will record this in our books. And number third, after recording we will communicate this information to the interested users. That means we call it identifies is related to the economic events, and recording is related to an organization's various books, and we will communicate this data to the interested users. Here three activities, we will show these three activities again. The three activities of the accounting process: identifications, recording, and communications. The identification, the selected economic events or transactions, we need to be identified these economic events. And number second, recording. The recording, just record, classify, and summarize. These three items related to the recording part, and then we communicate this information to the interested users. That means we need to prepare accounting reports. That means financial statements we need to prepare. That means financial statements. We have four statements here: income statements, owner's equity statements, balance sheet, and cash flows statements. These four statements includes the financial statements, and these financial statements we communicates these financial statements to the interested users. And just this financial statement we need they analyze and interpret for users, and then we analyze and interpret this financial statement for the users. Now we discuss about a company. A company identifies the economic events relevant to its business. Examples of economic events: suppose sales of snacks, sales of snacks, ships by sales of snacks, ships by Pepsi company, or provision of cell phones services, or payment of wages by Facebook company, credit purchase, credit sales. These all are economic events. That means we need to be identified the economic events. If we confirm that this is economic events, that times we need to be records these events. So we call this is the recording part. This is the recording part, and this recording consists of keeping a systematic ways and chronological diary of events and measures in dollars and cents. That means we record after confirmations of identifications. Thus, we record this in our books. Thus, so we need to be followed, keeping a systematic ways and chronological diary of events and measured in dollars or cents. That means, and finally, we communicate these informations. Thus, so here we call Pepsi company communicates the collected informations to the interested users by means of accounting reports. Thus, the most common of these reports are called financial statements. The financial statements, earlier we have shown this. Financial statements means income statements, owner's equity statements, balance sheet, and cash flows statements. Okay. Just here, when we communicate the information to the interested users, that times we need analyze and interpret. Analyze involves use of ratio, percentage, graphs, and charts to highlight the significant financial trends and relationship. And interpretation involves explaining the uses, meaning, and limitations of reported data. And three activities here. Just I will discuss here. This recording part is related only the bookkeeping and identification, recording and communications. The three parts combinedly related to the whole accounting. That means this is the basic difference of bookkeeping and accounting. Bookkeeping usually involves only the recording of economic events. That means only recording matters. And accounting involves the entire process of identifying, recording and communicating of communicating economic events. Who uses accounting data? That means internal users, marketing, management, finance, and human resource divisions. Internally they uses this accounting data. So we call this is the internal users of accounting informations are measured here, who plan, organize, and run the business. And this is the external users, investors and creditors, the external users. Here the investors, why they use this accounting data? They use the accounting information to decide whether to buy, hold or sell ownership shares of a company. Or creditors such as suppliers or bankers, they use the accounting information to evaluate the risks of granting credit or lending money. Besides the taxing authorities, regulatory agencies, customers, labor unions, they are interested to use this accounting data externally. So taxing authority wants to know whether the company complies with tax laws, and the regulatory agency want to know whether the company is operating within prescribed rules. And customers are interested to honor product warranties and support its product lines. And labor unions, they use this accounting data, wants to know whether the owners have the ability to pay increased wages and benefits. So here, according to these discussions, we have some true and false. True and false. Number one, the three steps of accounting process: identifications, recording, and communication. I think this is true. This is true. Bookkeeping encompasses all steps of accounting process. No, bookkeeping encompasses, not encompasses. So this is false, because of this is accounting encompasses all the steps in accounting process. It false. Number accountant prepare but do not interpret, but they interpret. So this is also false. And two most common types of external users: investors and companies officer. Companies officer, this is the internal users. So this is also false. And managerial accounting activities focus on reports for internal users. Yes, this is true, because of managerial accounting activities focus on internal users. That's why managerial accounting data only used internally. So in our next lecture I will explain the building blocks of accounting. Accounting includes here ethics, principles and assumptions. Includes here this learning objective 2: ethics, gap, measurement principles and assumptions. So this is uh, our final matter, the end. Thanks to everybody.